Good morning, Tobias. Thanks for joining us that early because Tobias is in DC, so it's very early for him. So special thanks to you, really. But let me just introduce the discussion. Do new forms of finance need new global frameworks? So we have seen that between the growing use and sophistication of crypto assets and the steady progress made to central bank digital currencies, we are really in the middle of a true digital transformation in money and finance. While this transformation has not fully arrived, we see that current private sector innovations and public sector experimentations are showing us the outlines of this transformation. For crypto assets and related decentralized finance, we see a host of very interesting and promising uses that are highly relevant for financial markets, but that go also with substantial challenges in terms of governance and in terms of conduct. At the same time, we have heard that 90% of all the world central banks are somehow doing some kind of research or experimentation with CBDCs. And some commentators expect that by the close of this decade, we might have the introduction of wide-scale, widespread operational CBDCs across major economies. Critically, it has been said by both Carmine and the Czech Deputy Prime Minister, these developments are global in nature. The crypto asset markets are geographically decentralized, they are hosted across multiple jurisdictions, and they are available virtually to anyone in the world, with very few barriers to entry. And we can see also that operational CBDCs would be a natural feature of the existing international financial architecture, but it could also add new layers of globalization to financial markets, because central banks are placing a very strong emphasis on interoperability between CBDCs and on enhanced cross-border payments. So each of these developments will have international impacts, of course, and implications for financial markets, obviously, each in different ways, for both better and worse. And a substantial amount of work is already happening in international organizations, in international standard setters, to address these developments. If we look at the FSB, the IOSCO, the BIS, or IMF and the OECD. So in face of such far-reaching transformation, we must consider whether our current ways of working are up to the task, or whether the international community is truly ready for the coming transformation. So we must ask ourselves, do new forms of finance need new global frameworks? To answer this question, or to begin to answer this question, to begin this conversation, we have a very eminent panel, or two high-level people, Tobias Adrian, from the Financial Counsel and Director of the Monetary and Capital Markets Department at the IMF, and Carmine Di Noia, our Director of the Directorate for Financial and Enterprise Affairs here at the OECD. So, to start this conversation, I will ask both of you a series of questions. Maybe I will ask first Tobias to answer the first one. And we'll start with the crypto asset markets. These markets have evolved dramatically in the past few years, both in terms of the scope and the complexity of financial services that are offered. And yet, they still represent a negligible amount of value compared to traditional money in circulation or funds under assets under management. So to your view, Tobias, what are the main concerns for bodies like the OECD or the IMF with these developments?
Yeah, thanks so much for your question, and thanks so much for having me on this panel. I'm sorry I cannot be with you in person, but it's really great to engage in these important questions. So let me step back to answer your question about the crypto asset markets. Let me step back and first note that crypto assets were not created with policy objectives in mind, right? Crypto assets were created by private actors with the goal to be remote from governments, remote from central banks, and to create a parallel monetary or currency system. And so, one question is where the goals achieved. And, I think that's, debatable. First of all, it has been widely noted that crypto assets are not very good as a means of payment, either domestically or cross borders. And that is primarily because the vast majority of crypto assets are unbacked. So let me start with the unbacked crypto assets and then go to the stable coins, which are trying to solve some of the issues. So 2 days ago at the IMF, we published 2 fintech notes by staff of the IMF, which are outlining a regulatory framework for crypto assets. And I'm happy to share the links to those fintech notes. Regulating crypto assets is challenging because they're decentralized in nature, so they're not necessarily associated with an entity, which is traditionally the case in financial markets and financial institutions. So in the case of crypto assets, you might have to regulate the entry points into the system. And that, I think, is a fundamental principle. Now, recent turmoil in crypto asset markets has underlined the importance to regulate this segment. And we are certainly pushing for global standards around the regulation of crypto assets. There are many regulatory gaps, in some areas such as the European Union. Some of those gaps are being closed through regulation. But in our view, there should be a common approach across many countries in terms of regulating cryptos. To make standards effective, common taxonomies are needed. Secondly, reliable and consistent data needs to be collected. At the moment, the data that we have on crypto assets is very scattered and self-reported, and it's not very reliable. Global standards should be comprehensive and risk-based and should cover all important activities and entities. Crypto asset service providers in particular, so those are the entry points that I mentioned earlier. So those are these major crypto service providers that are the access point for the vast majority of investors or consumers of crypto assets. So those deliver core functions and generate key risks, and they should be licensed, registered, and authorized. And in particular, when crypto asset service provider provide multiple services, they should be subject to prudential and conduct requirements and potentially to payments oversight. So it is important to cover all components of the ecosystem. And of course, there might be some entities that are systemically important. And so systemically important service providers in the crypto asset space would have to be subject to additional requirements. For example, those should be prudential requirements and conduct requirements, very much comparable to those applicable to other systemically important institutions, both financial institutions and financial market infrastructures. Now, turning to the stablecoins, stablecoins in some sense are a little bit easier to regulate because these are typically associated with a legal entity that can in principle be regulated. We already see that some stablecoins are operated out of banks, and operating stablecoins has a lot of bank-like features. I think some jurisdictions are heading towards the direction of thinking of stablecoins as banks, but of course there are other stablecoin providers which are much more like money market funds or so. So I think there has to be potentially a variety of approaches of how to regulate stablecoin. But again, prudential standards and conduct standards would have to be applied. There would have to be requirements to register and to be regulated. So authorities should provide clear requirements on regulated financial institutions about how to engage with crypto asset providers as well. So this is concerning regulated financial institutions such as banks or insurance companies should also be subject to regulation in terms of how they interact with the crypto asset markets. So let me stop here.
Thank you, Tobias. And now, Carmine, do you agree with the main concerns that Tobias has vis-à-vis crypto assets? Do you have others or different ones?
No, thanks, Matilda. And actually, I don't know if I'm paid for the number of my spots that I have in our conferences, but surely we have to thank Tobias because it's very early there, and so really thank you very much for being part of this I would say small panel, but I hope it's going to be interesting. I would say I'm biased by in talking about this, Matilda, by as you know, I have been just arrived here since 6 months. I was a securities regulators, and many of actually the challenges that Tobias was, mentioning, identified actually were those that we have been, I would say, I wouldn't say fighting, but actually under our close attention in the last, I would say, months of years of developments of, crypto assets markets. Obviously, this is, I would say, I don't want to start from the Roman age, but obviously we have seen a big, development. The big framework is that we are having more and more, I would say, we've gone from public money to private money in a sense, all digitalization, payments, system, everyone, cash is not used anymore, but also I would say the evolution of digital ways of using traditional financial instruments, the evolution of exchanges, the way of placing orders of securities, and so on. So this is the big evolution. Then we had this, I would say, the crypto asset boom. Then crypto assets is a word that may mean many different things, and actually means many different things all over the world and in different jurisdictions. And starting from one of the last point of Adrian, obviously that's why we will need, markets are global, financial markets are global, and it's not anymore the time of let's say a citizen and investor investing in, let's say, a national financial instrument, maybe by a national issuer. And by the way, decentralized is by definition you have not a single one, and in a national market. So markets are global, so need of global standards. Now, why we are, in a sense, what is also the role we can play here and an international organization, and why we are also interested. I would say, and again, going back to the structure of what I mentioned at the beginning, what we have seen up to date, I would say, and what we may see then in the future. Now, I would say, and again, given this fragmented or non-existing regulation and supervision up to now, at least in a coherent way, we have seen on the one side maybe the provision of what might be considered a financial service or providing financial instrument in the in the common sense. So already in the regulation, but in a non, let's say, compliant, manner, or fully compliant. We see common features of this broad set of what we may call crypto asset. One common feature is surely the extreme volatility. Okay. Also, and Tobias mentioned this, obviously, I would say the non-use, apart from some very few exception in only, I would say, in some period in terms of acceptance of as a payment, payment means by crypto asset. What we have seen in some cases, surely a lack of, I wouldn't say opacity, a lack of disclosure, reporting, so the traditional, features of that, a securities regulator or a financial market regulator, even a macro stability regulator, and maybe an international one is taking care. Unclear, you mentioned the word governance or untested governance frameworks, technological limitations, and some also operational risks related to the underlying technology, also given the very diverse functioning of them. In some cases, so in the absence, I would say, of, and again, Tobias mentioned, of protection. I don't know if to say investor protection, because I'm not sure this is an investment, but okay, of protection of buyers that would require surely at least similar products would be protected in different ways than what we see in some cases in the crypto asset market. So as such, market for crypto asset may involve significant risks for investors. And so the investor side, the micro stability side, and the macro stability side. So prudential at the micro level and a stability issue. Okay, up till now, we have seen more, in a few cases, I would say, fraud-type issues rather than financial stability threat, at least macro-financial stability, given also the size of the market. Cases when they have been attracted, and again, regulators have been trying to cope with, for the future, we mentioned also before, future regulation like MiCA in the EU, but also trying to attract the market in a traditional domain of financial regulation, try to say, okay, maybe these crypto assets, are financial instruments, let's behave as if, okay. And so we have seen actually many authorities are investigating in cases which can be perceived of market manipulation, of fraud, or violating transparency and so investor protection. And actually including, and I see my colleagues and friends, including a topic of tax evasion, because this is also related to also using this for moving. In some cases, important also sum of money, but also with unclear effect on that. So these, and I conclude, Mathilde, this obviously, again, is cutting across as all the, I would say, the digital finance issue, also cutting across many of the traditional, issues we're talking at, and typically, okay. And, but again, without reaching systemic levels. Now, so this is where we are, and maybe what these developments may be headed, especially in this evolution of digital age. Now, for sure, we have, like in many cases we had in the past in the financial market, we have network externalities, we have adoption and growth in some cases at an increasing, growth rate. Stable coins issuance, and so I also connect to the second topic, is growing a lot. Okay, the numbers are still not huge, no? We talk about 100, 200, 160 billion dollars, which is, okay, 3-4 times a large bond issuance by AT&T. But these assets form a direct transmission line between these volatile and risky crypto asset and DeFi markets to traditional financial markets. And actually our research also, our financial market division and our OECD research in general, growing, not only showing the growing activity in the market by institutional investors, so not only adoption, use, issuance, but use by the traditional financial market actors, so hedge fund, institutional investors and others. And so again, this may be a link to traditional financial markets. So these, and simply I echo what Tobias was saying, maybe here comes the role of international financial organization, and also, like, obviously the IMF in premise, but OECD as such. We have to recognize that markets like this, decentralized blockchain technology and others, are global, effectively global markets, open to anyone. So managing risks without putting obstacles to evolution needs and requires a global and cooperation, as Tobias was saying. So framework, international framework, global standards, obviously then adapted to then local areas and local markets, without forgetting the very useful role that this evolution is having in terms also of increasing financial market participation by many of citizens. So this is also a question let's take care, but it's a question also of financial democracy. So let's try to find and to strike the right balance. Thank you, Matilda.
Thank you. So many concerns, but yeah, let's try to find the right balance. And before we go to this, what we need in terms of international financial architecture, we have been discussing now the crypto assets. Let's look at the CBDCs. And as we said earlier, I mean, most of the central banks are really actively exploring CBDCs at a wholesale or retail level. And it's fair to say that this would not have happened without the rise in the crypto assets. So as these efforts of the central banks are becoming more operational, what do you see as the major shifts this will cause and the priorities for international cooperation? So I will begin again with Tobias, maybe.
Oh, thank you so much. So, you know, when we look around the world, we see over 100 central banks exploring CBDCs. And I fully agree that crypto asset developments have been an important impetus to look at CBDCs. But there is a second reason to look at CBDCs, and that is related to what I was saying in the first question, which is that new technologies should be used for policy objectives, right? So cryptography is very powerful, but in crypto asset markets, it's not used for policy purposes. So I think CBDC offers a way to use those new technologies to accomplish policy objectives. Now, you know, there are many different shades of CBDCs that are explored across countries. So let me make perhaps 2 or 3 distinctions. So the first distinction is between wholesale CBDC and retail CBDC. Wholesale CBDC is essentially, you know, a tokenization of the interbank market. So interbank markets are already digital, of course. They're digital payments for central bank reserves that are traded among banks. And wholesale CBDC is very similar to that, but a priori it would be using new technologies, i.e. cryptography, and that can have potentially benefits. I think the key differentiation to what is existing in crypto asset markets today is that, of course, number one, there would be access to central bank liquidity, which the crypto asset system does not have for very good reasons. And number two, I would be surprised if we would see sort of like distributed ledgers, because distributed ledgers have the problem of a lack of finality of payments and a lack of identity. And so I would expect that these systems would be more sharing a common ledger. So that's wholesale CBDC, and I think many countries are exploring wholesale CBDC. Retail CBDC is much more wide-ranging because it allows individuals to have the ownership of central bank liabilities, which of course is the case through coins already, coins and bills. But of course, the vast majority of money liabilities are private liabilities. These are bank deposits, savings accounts, etc. So retail CBDC poses the question of how much of a shift households and corporations would do from, say, M1 and M2 to this tokenized M0. And that's a major challenge that central banks are struggling with. On the one hand, for financial inclusion, it might be quite good to have more access to digital liabilities that are issued by the central banks. So for emerging markets, this is quite interesting. But on the other hand, you know, it does pose this disintermediation risk for the banking system. So an alternative approach is to think about wholesale CBDC combined with tokenized deposits. And so many banks are exploring how to tokenize deposits. And, there's some specific examples. And that is certainly, something that is explored in a number of jurisdictions. Finally, let me say one more thing about the more macro considerations. And that is that, many emerging markets are keenly interested in CBDCs because they worry about the undermining of their monetary independence, either through foreign CBDC, say a dollar or a euro or a yen CBDC, or through stablecoins that are already trading. And indeed, we see that in some jurisdictions that are more fragile, that have less credible monetary frameworks, there is certainly, quite a widespread flow of capital out of countries via crypto assets, and stablecoins can potentially play an important role here. So developing CBDCs to some degree is, something about creating a more efficient financial system, more financial inclusion, but it's also, for some countries, a defensive move against the threat of loss of monetary independence. Let me stop here.
Thank you, Tobias. So now, up to you, Carmine.
First of all, I agree with obviously what Tobias was saying. On our role also here, we have been, we are following closely the evolution, the debate, the attention that many countries and central banks are having, also from, I would say, also with collaboration and with all international organizations and others. From our, I would say, point of view, there are aspects, and actually some of them have been mentioned by Tobias at the end, which are very important, obviously, cross-border payments and settlement, operational integrity, maintaining a role for the private sector, and here, obviously, an essential distinction is wholesale or retail, or let's say, put it in a different way, potential access of retail to CBDC. And we know that in some cases also, big debate in these days for important central banks around this part of the globe is maybe to discuss with the market consultation documents actually exactly this, if prohibit the access of retail to CBDC. And I would say this is an important aspect, or also maybe by definition having sort of zero net return on others. This is an important issue. But also the issue is the effect, and this is the issue for, I would say, both CBDC and could be also for the broader debate of stablecoins, the effects of financial intermediation, the other side. Obviously, having the possibility of retail CBDC may mean basically that, or could imply that everyone would probably move, why not? It's deposits from a commercial bank to a central bank. Okay, this surely would, other things being equal, would services offered would be probably, but this may have, you can imagine, a huge impact on the traditional, commercial banking sector in terms of would have an impact, and it's not that could transform in an important way the way commercial banking is due there to, let's say, to provide, for example, resources or loans, let's say, to the market. It could happen, but simply with a different liability, more issuing, let's say, other liabilities like bonds rather than deposits. Okay, but would be an impact. But again, in many cases, maybe also due to the pressure of commercial banks, the idea around is, again, not to have necessarily retail CBDC. But okay. But actually, there are also other important aspects that can be interesting for also, which we are following a bit also closely, and actually the cross-cutting OECD activity in general. because these are implications that go also beyond monetary policy, central bank mandates, and are more, I would say, policy issues also for governments. One example, we have discussion with our colleagues in other also directors, as CBDC could turn financial transaction into personal data. So we need to consider data governance and privacy, including for cross-border payments. These, they would require CBDC a substantial also financial consumer citizen education, okay? The topic for us, you may know, financial consumer protection is relevant. We have just updated, about to be, hopefully to be endorsed by the G20 leaders, the new G20 OECD high-level principles on financial consumer protection. This part is also relevant in case for people using and consumers using potentially or direct or indirectly CBDC. Depending also on design choices, and this is also maybe one point that Adrian, Tobias was pointing at, is the CBDC's availability across borders and across currencies that could have an impact on for the management of capital movements, micro and macro level. And these are maybe technical policy priorities, but there are also other aspects that warrant the attention of international community. CBDC can have obviously a lot of positive aspects, but also can be tools that may have some negative ends. We are putting close attention to, for example, to the fact that CBDCs could be used and act as an instrument of state surveillance, coercion or exclusion in countries that have weak governance, non-democratic systems, or weak protection for human rights. And also aside from these very important implications for citizens, also the impacts would not be contained within national borders. They could affect any foreign citizens using that currency, and could also be directed against foreign business to tilt the playing field and undermine principles like competitive neutrality, which for us is a mantra. So the international norms we establish around CBDCs needs to go also beyond operational and policy choices. So there are could be intended or unintended consequence on the widespread adoption. So again, this also probably leads again to conclude saying again, I think we need dialogue, confrontation, cooperation, and maybe even in this case some standards. Okay, thank you, Matilda.
Thank you. Because we don't have so much time, I will go directly to the fundamental question we want to ask both of you regarding the global governance approaches to both like crypto assets and CBDCs. So basically, do you think that these new forms of finance need new global frameworks? You were alluding to that, Carmine, already. Or can we address these challenges by simply tweaking the current mandates and the current approaches? Once again, maybe Tobias.
Yeah, very happy to come in on this very important question. And, the governance is extremely challenging. And, part of the reason why cross-border payments are still expensive for some corridors, not for all corridors, but for some corridors, they're quite expensive, can be linked to governance questions. So let me be more precise. So within countries, central bank reserves are the common settlement asset. So banks can make payments across institutions by using central bank reserves. In cross-border payments, such a common settlement asset does not exist, and I don't expect there to be a common settlement asset across borders. So the current state is one where correspondent banks essentially trade IOUs, so they trust each other to make cross-border payments. But that is challenging and costly because not all payments are legal across borders. So this is this question about AML CFT, so the system is built in a somewhat cumbersome fashion, right? So typically payments are not done directly in between banks across borders, but through the correspondent banks. And the reason is this governance around the AML CFT issues. So these are very, very fundamental issues that, can't be solved per se by technology. Technology can be helpful in solving these questions, but the governance questions are more fundamental than that. So in our view, any approach to cross-border payments has to consider not just the technology, but also the economics of cross-border payments and the governance of cross-border payments. And so what we're exploring at the moment, and where we have forthcoming work, within the next month or so, is to think about the importance of platforms across borders. So platforms de facto are already extremely important in cross-border payments. For example, SWIFT is extremely important for messaging across countries. For the G10 currencies, or a somewhat broader universe than the G10 currencies. I think for 14 currencies, CLS is extremely important. And there are a number of other platforms which are primarily private that are extremely important in these cross-border transfers. So what we're exploring in current work is whether there's room for platforms with a broader membership, perhaps at the regional level or perhaps at the global level, that are thinking carefully through the governance. So where participation on the platform would be subject to very high requirements in terms of ensuring AML CFT and know your customer requirements. But once you're on the platform, you can essentially trade, and new technologies are used to solve economic problems. So I think this idea that these platforms can be very useful is a powerful one, but of course it does require many to come together to agree on these governance standards. So I think, basically to answer your question, I think it is the kind of question that international institutions such as the OECD or the IMF are created for. And Carmine, I think, alluded to that already. It is quintessential bread and butter for, say, the OECD or the IMF or the BIS to think about not just the technology, but the governance around these issues. But having said that, these are challenging problems, and in principle, there could be solutions, but to get them to be implemented is certainly going to be a major effort. Let me stop here.
Thank you, Tobias. So Carmine, could you develop on what you already said? We need new global governance, but what kind of?
This is, obviously the topic we can then spend the rest of the 2 days, but it will be more boring for you than talking. Yes, but, on the one side, it's easy I would say in general, in the remit of financial markets, to talk about, okay, markets are global, we need, then global standards. We have more, we see after the crisis, there was the FSF, then FSB. So, but obviously here, talking about, I would say, globalization, standardization in the field of, I would say, central banks and currencies seems a contradiction in terms. So if there is something which is, national by definition, is, the central bank and central bank money. We have cases like the euro area where you may have, and we have historically also other experiments or even pegging. But okay, so, but again, this is by definition something against any kind of standardization. But actually we are exactly the opposite. And by the way, this is the raison d'etre also, I would say, of IMF as such. So, and really these, I think that in this area, we have, for CBDC, we may have together topics of, competition on one side, coexistence, convergence issues. But the point, and this is the important, is that, so, given the level of payments, cross-border payments, luckily we freedom of capital movements, also thanks to the important instrument managed by historically by IMF and in part also by us. So it's, I think that we should overcome this national and nationality issue, and so I think we need, I would say, a dual approach. So surely, bottom up, but in part top down. Honestly, we have seen that in dramatic movements, and I use this example and joke, Mathilde knows, I think that we had, Bretton Woods conference. So I think we really need a sort of new Bretton Woods, I would say, for digital finance, DeFi, for crypto assets, for CBDC, but we surely need that all the actors, and by the way, we have also different international fora dealing with this, but they have, I would say, a different kind of composition. In some cases, maybe, obviously, maybe central bankers and people interested in only, let's say, in the macro stability side, but there are the micro stability, there are the investor protection. We need really a broad, at least place where we have to put together all the relevant, let's say, policy makers, regulators, supervisors, as broad as possible, okay, in order then to find also top-down at least some principles that then can go down. I think this is essential in order to avoid also, let's say, tensions that I think otherwise we may have much broader than what we have experienced in the last, I would say, 20 years a couple of times. Thank you, Mathilde.
Thank you, Carmine. So, because we have 5 minutes left, I would like to give the floor to Tobias to react maybe to your suggestion, Carmine, and to tell us for him what are the next steps for the international policy community to, reflect and act on all these challenges that we have been talking about, and more specifically, of course, for the IMF.
Yeah, thanks so much. So the mandate of the IMF and other international institutions is, of course, to foster multilateral cooperation and to improve the international monetary system, in particular for the IMF. So facilitating the flow of capital, the stability of monetary systems. These are very fundamental. Digital finance is changing the nature of the international monetary system. And as I alluded to at the very beginning, new technologies are very powerful and can potentially improve the financial system. But it is important to align the usage of the technologies with policy objectives. So that means having a stable monetary system, a stable financial system, a financial system with integrity, i.e. where capital flows are legal, and one that is inclusive. And I think there's a long way to go to achieve those goals. So I would charter the path forward for the international community to use new technologies in order to improve the stability, the efficiency, and the integrity of the global financial system. I think we have some clarity about some elements, but there are many challenges ahead. And it remains very first order for international institutions to work with the membership, with the member central banks and the member regulators to charter the path forward. Let me stop here.
Thank you, Tobias. And as a last point from Carmine, what are the next steps for the OECD, to your view?
This is, again, this evolution is not I think, and we can treat also from the international organization point of view as business as usual. This is something very important to be careful to analyze and to see, again, the impact. So I think the OECD and the OECD role traditionally and also, first of all, is always to cooperate and very important with countries, with its members, with actually many of also the other G20 international organization, is to provide, robust analysis, evidence-based, to translate these, if relevant, applicable, as we have done also in the past, into possibly, policy guidance. And then I think in this case, maybe one of our strengths, and actually today is also an example, is really to use these, let's say, convening powers. And so I think that again, it's very, very important to, before taking any measured decision, to talk, to have dialogue, so to be together. So I think we can, if interesting requested, we are obviously available for all the international, community and the others to help in providing, the setting for exchange and cooperation to translate, I would say, evidence into action.
Thank you very much. I think it was just the beginning of a conversation, but I think we have a broad landscape. We have touched on some of the challenges and some of the ambitions going forward in terms of the governance and the global governance of this new digital finance and money. So thank you very much, Tobias and Carmine, for introducing, I think, the most of the panels we'll have in these next 2 days will be really to delve into these points, these important discussions. Thank you very much.
Thank you again, Tobias, really for your effort. Okay, thank you very much. Bye.
Thank you.
And I hope to see you soon in person. Thank you, bye-bye.
Absolutely.